Hello everyone, welcome to this video where I'll be discussing the question on many people's mind. Will the real estate market crash in 2023? My name is Martel, and as an experienced real estate investor, I'm here to give you a comprehensive analysis of the state of the housing market and help you understand what factors are at play in determining housing prices in 2023. In this video, we'll cover 6 key metrics to help paint a clear picture of the current situation and where it might lead us. Inflation, interest rate, unemployment, housing supply and demand, cryptocurrency, and recession fears. First, let's take a look at inflation. According to economists, inflation will continue to decline in 2023 from the current inflation rate of 6.5% and to level around 3 to 4%, which is the normal inflation rate. This inflation decline doesn't mean that the prices will go down. It just means that prices will not go up as fast. And this is good news because it means that people will not stress out as much about prices going out of control. Second, let's look at interest rate. When the cost of goods and services in the economy increases, which is to say that the inflation is high, the Fed may raise interest rates to curb inflation and keep it under control. Higher interest rates make borrowing more expensive, which will slow down the economy and help control inflation. The 30-year fixed mortgage rate has been on a steady decline since November 2022, from 7% to 6.15% today. And since the inflation is projected to decline further in 2023, the Fed will most likely keep interest rates low. It is projected that mortgage rates will go down another 0.5 to 1% by the end of the year. And this low interest rate is another positive indicator for the housing market. Low interest rates make borrowing more affordable for buyers, leading to increased demand for housing and potentially allowing more people to move out of their existing house into a new house. Now keep in mind that even if the Fed decided to increase their rates, it doesn't mean that the mortgage rates will go up in step. In fact, in November 2022, the Fed increased their rates while the mortgage rates continued to decline. And just last week, a similar Fed increase was met by a reduction in mortgage rates. Let's move on to unemployment. Now, economic growth is projected to remain positive in 2023, causing some shifts in the labor market, yes, but the unemployment will remain low, which is a positive sign, again, for the housing market. Low unemployment means more people will have stable income and job security to make a housing purchase. This will lead to an increase in demand. With job security on the rise, people will feel more confident about making a housing purchase. What do I expect in terms of housing supply? With inflation stabilizing and mortgage rates becoming more normal in everyone's mind, this will lead to more consumer confidence, and therefore I expect housing demand to remain high. On top of that, we have major demographic shifts that were paused in 2022, such as the famous millennials family formation. And in 2023, I expect these same millennials to move out of their apartment or parental home and move into their own home, which points to even more housing demand in the single-family housing market. The housing supply shrank in 2022 due to a dramatic increase in mortgage rates, which caused potential sellers to hit the pause button. 2023 will be a much better time to sell because there is less uncertainty and the mortgage rates at 6 or 6.5% won't seem as high anymore. For these reasons, I expect a moderate increase in housing supply. Since the increase in supply will not be as high as the increase in demand, I expect the housing prices to go up at a moderate rate in 2023. But now let's talk about cryptocurrency. The crash in cryptocurrency can have a negative effect on the economy. A large number of people have invested in cryptocurrency, and when its value drops significantly, it leads to a loss of wealth for those individuals, which can, in turn, lead to a decrease in consumer spending and a decrease in economic activity. Sounds fair. However, it's worth noting that the overall impact of a crash in cryptocurrency on the economy would likely be small, as the overall size of the crypto market is really pretty small compared to other financial markets. And the inflated cryptocurrency prices generated somewhat of a fake wealth effect. Finally, let's talk about recession. Obviously, there's a recession fear out there that will affect consumer confidence. But with so many other positive signs, I'm pretty sure that the consumer behavior will be much more balanced and moderate. On the other hand, a recent poll of economists from the Wall Street Journal pegged the recession chances in 2023 at 61%. However, when it comes to the housing market specifically, their outlook is more positive. So in conclusion, while a recession is a possibility in 2023, the outlook for the housing market is more positive. Low inflation of around 2%, lower normalized interest rates, an increase in housing supply and a higher increase in demand, positive economic growth, and low unemployment are all positive indicators for the real estate market. It's important to keep an eye on these factors and any new developments, but overall, the outlook for the real estate market is positive for 2023. Thank you for watching, and I hope that this video has been informative. Remember to hit that like button and subscribe to my channel for more real estate investing tips and insights. I'll be back next week with more insights and expert analysis on the real estate market, so stay tuned.